there's no way that the world is going to accept the situation we're in now again. The Federal Reserve cuts rates, say they cut it 1%, 2%, and rates don't go down or go down very little. Or, in my opinion, ultimately rates are going to go higher rather than lower. That would break confidence. Now, in the real world, what does that mean? You're already looking at super soft real estate market, housing market across the country. Commercial real estate is already in the middle of a crash. Higher interest rates will smoke the real estate markets. Higher interest rates make it harder, more difficult to carry derivatives. And the world is awash. It's flooded with derivatives, and those derivatives are what price assets. You'll see derivatives begin to default, and then you get a cascade. And once derivatives default, you're talking about over $2 quadrillion worth of derivatives, which is way, way, way more than the value. It's probably double the value of every asset on the planet. So it'll be a paper bonfire, 100% guaranteed. I mean, you cannot have a sector of derivatives fail and other sectors not fail. And the reason being, it's one big, gigantic financial orgy where everybody's connected to everyone else. So if you get one entity that's infected, the entire system's infected. And understand that the problem with the derivatives chain, the way it's set up, is that if you have a contract between two entities and one entity wins, I mean, it's a zero-sum game. So one entity wins, the other entity loses. But if the loser loses so big that they can't pay, then the winner doesn't get paid.
Yeah.
Then whoever the winner is, whoever they're doing business with, they're going to say, hey, wait a minute, they got this big loss on their books. I'm not sure they're stable. So it spreads like that. And of course, the loser, they've gone bankrupt. So anybody who's doing business with them already, they become an immediate loser because the other side of the trade can't perform on that contract. And I've said for a while now that the ultimate goal is to get the entire earth under a central bank digital currency. Now, how do you do that? You couldn't bring that out today because the vast majority would say, no, I don't want to do that. But if you destroy markets, and remember, when markets get destroyed, you're talking about banks, brokers, insurance companies, et cetera, going under. People, the great taking is going to happen. And when that does happen, people are going to beg governments around the world for a central bank digital currency and universal basic income that will, save the individuals. The only problem with a central bank and digital currency is that they can shut people down anytime they want. You and I, we do an interview like this after a central bank digital currency. Before we got off the call, you'd have nothing. Your account would be frozen. My account would be frozen. And all you got to do is look at the Canadian truckers to know the mindset as far as wanting to shut people off that speak ill of the official policy. People ask, when's the reset? And I just tell them, you're watching it in real time. I mean, think about this, Danny. Okay, so gold was $1,700 2 years ago. Now it's $3,400, double. Any asset that is the same price that it was at the end of 2023 has lost 50% of its value versus gold. Mm-hmm. And gold is the measuring stick. It's not the dollar. It's not the yen. It's not the euro, the pound, whatever. The measuring stick is gold. And that's why when people ask me, are we going to have inflation or deflation? Well, we're going to have inflation of the things you need, food, gas, etc., and deflation of the things you have. And the deflation of the things you have, not necessarily in dollars. You could see an asset, you could see a piece of property double in value and gold go up 4 times. And that thing that doubled in value has lost 50% of its purchasing power versus gold in that time. So gold is the measuring stick. What if central banks been doing for the last 2 years since the sequestering of the Russian treasuries. Central banks all over the world have been buying gold. That's about as inside as you can get.
Any other signals that you look for when it comes to gold and silver?
Because I believe that this has to be a credit/currency event. I think if all of a sudden you started seeing wild volatility in currencies, if you started seeing bigger volatility in or on the U.S. Treasury curve, I mean, this is going to be a credit/currency event. And if you start seeing, wild gyrations, or not even wild gyrations, just a movement upward. If you see rates go through 450 on the 10-year Treasury and you get a 5 handle or over a 5 handle, I don't think markets can handle that. And I think that would be a signal to foreigners that the game's over.